Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 457 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about one of the largest companies in the world, one of the most well-known companies in the world, and that is Berkshire Hathaway. Because this weekend, Berkshire Hathaway had their annual shareholders meeting, and in Buffett and Munger fashion, there were plenty of sound bites that I think are worth talking about, and I ultimately think can be very relevant to our own investing lives and to what we think about the market at large and how investing is changing and how speculation has normalized in our financial lives. Maybe not in your own life, but in the financial world around you for sure. So stick around for a discussion of all of that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan. And that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. Then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you're interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, Berkshire Hathaway is a company that has created massive amounts of shareholder value over a long period of time, right? The company goes back further than this, but if you just go back to 1996, that's as far as Google will let you go back. You go back to 1996, they have created 1,245.13% in the way of returns. So if you go, let me think, 1996, so that'd be 26 years, and so that's 1,245. So 1,245, this is just a rough estimate. This is just going to be a mean, right? That would mean that they have created an average annual return since 1996 of 47.88%. What? I mean, what? Like, how? What company do you know that's created that much shareholder wealth? Now, undoubtedly there are some, and you can name them, and we would agree, right? But that's sustainably over that long a period of time. I mean, you look at the chart. Yeah, there are some bumps along the way, like there isn't any chart, right? But you just look at that chart, and it's like, wow, up and to the right, right? So they've created so much wealth. And it's no surprise why we know who Warren Buffett is, why we know who Charlie Munger is, and why they are so well renowned, and everybody stops and listens to every little thing that they have to say along the way. And so that's exactly what I want to talk about today. I want to talk about some of the things that they have to say, that they had to say this past weekend when they were taking questions in their shareholder meeting. And specifically, I want to talk about things that they said that were quite negative. Okay, we can talk about the good stuff all day. We can talk about their profitability. We can talk about their growth, all these types of things. We can talk about the fact that year to date, Berkshire Hathaway stock's up 7.33%, while the market's down over 13, and that's as of this past Friday's close, right? So we could talk about that, but I'm not going to, right? I want to talk about some of the funny things that these old guys have said, even though these old guys know probably more than me and most of you put together. So the first headline that caught my eye was, and if you have ever listened to Charlie Munger, you know he has a flair about him. You know he has some choice words about certain things. And one of these things is Robinhood, right? The app, the company Robinhood. Charlie Munger says the Robinhood trading app is justly unraveling for disgusting practices. Okay, so what was the context here? So Vice Chairman Charlie Munger blasted stock trading app Robinhood on Saturday, saying the company is now unraveling. It's so easy to overdo a good idea. Look what happened to Robinhood from its peak to its trough. Wasn't that pretty obvious that something like this was going to happen? Munger said at the annual shareholder meeting on Saturday. He lambasted what he characterized as Robinhood's short-term gambling and big commissions and hidden kickbacks and so on. Robinhood does not charge user commissions and generates a majority of its revenue from payment for order flow and the back-end payment brokerages receive for directing clients' trades to market makers. It was disgusting, Munger says. Now it's unraveling. God is getting just, is what he said. So basically, he has such strong feelings about the whole payment for order flow idea. And if you've never heard about this, all it is that if you use Robinhood, basically, they sell the data. They sell the trading data because they don't charge any commissions or anything, right? So they sell the trading data to, a hedge fund or, capital management groups. And basically, those companies can front run your trades or know what you are trading in and in what volumes and things like that. And a lot of people don't like it, right? But nonetheless. Then it says Robinhood went public last July and shares are down 88% from their August 21 high. So that's quite substantial. The company rose to prominence during the pandemic, played a key role in some massive short squeezes last year. Munger in February 2021, amid a wild trading rush, first criticized Robinhood for its practices, calling the app's business model a dirty way of making money. The company on Thursday reported a decrease in users and a wider than expected loss for the first quarter, which the decrease in users is not super surprising, right? I mean, anything like Robinhood that's going to benefit from speculation, when speculation's not as hot, when the market's not hot, then it's going to suffer. And that's exactly what we're seeing. Earlier in the week, Robinhood announced it would cut about 9% of full-time employees. So anytime you're cutting workforce, that's never a good sign. And Munger's comments echoed remarks from Berkshire Chairman and CEO Warren Buffett earlier in the meeting, ripping on Wall Street for turning the market into a gambling parlor, which we'll get to those comments here in just a second. Is it wise to criticize people at all? Buffett asked. Munger said, probably not, but I can't help it. And again, that just sums up the Buffett-Munger relationship, right? Buffett tries to keep things sometimes PC, but Munger just absolutely cannot help himself. So we move on. We'll move on to the next set of comments that were made by these gentlemen, and we will talk about Warren Buffett ripping Wall Street for turning the stock market into a quote-unquote gambling parlor. If you've ever listened to Warren Buffett talk, right, he is the epitome of a long-term investor. Right? He's the epitome of a buy and hold. Even though he sells positions from time to time for certain good reasons, he's said many times his favorite holding period is forever. Right? He's talked about don't buy anything in the stock market that you couldn't, turn the market off for 5 years or 10 years or however long, and then come back later and not know that they would be profitable, would be making money, would be a good business, right? He's all about buying good businesses. So for the market to be speculative is just not his game. And it's not the game of the man who taught him, right? If you read The Intelligent Investor by Ben Graham, you read Security Analysis, none of it is speculative, right? It's all based in quantitative fact. It's based in profitability. It's based in the fundamentals of corporations. And that's what Buffett sticks to for the most part, right? So, Berkshire Hathaway CEO Warren Buffett lambasted Wall Street for encouraging speculative behavior in the stock market, effectively turning into a quote-unquote gambling parlor. Buffett, 91, spoke at length during his annual shareholder meeting Saturday about one of his favorite targets for criticism, investment banks and brokerages. He said, Wall Street makes money one way or the other, catching the crumbs that fall off the table of capitalism. They don't make money unless people do things and they get a piece of them. They make a lot more money when people are gambling than when they are investing. And this is so true. And I can just give you a handful of examples, right? Just in the simplest form, right? Every time you buy an index fund, even if it's super low cost, anytime you buy a mutual fund, anything like that, right? You are paying an expense ratio. And that expense ratio is going to portfolio managers, it's going to the corporations, the companies, all these types of things. And it only happens if you're putting more and more money in, right? You're putting more money in, they make more and more money. Your money grows, they make more and more money, right? And that's fair, but it's true. It's a piece of the pie. For a long time, and you say what you want about Robinhood, but they got rid of basically the whole transaction cost of commissions. Now, it also pushes people towards the payment for order flow ideal, which is not very popular as far as, for the individual investor, not very popular. But, in the not too distant past, buying a stock costs something, right? So the more trading you did, the more you paid to simply just trade, right? To simply buy something, you had to pay a cost, right? And this happens, he talks about Wall Street. He's right, making money one way or the other, right? If they're underwriting securities, meaning like if a company's trying to go public, right? An IPO, they're going to take a piece of the pie for helping that company go public. If a company's issuing new equity, they'll take a piece of the pie. If a company is issuing new debt, they'll take a piece of the pie, right? So Wall Street is, like he's saying, going to take a piece of the pie, is going to get the crumbs that fall off the table at just about every turn. Now, Buffett bemoaned the large American companies have, quote unquote, become poker chips for market speculation. He cited soaring use of call options, saying that brokers make more money from these bets than simple investing. And this is quite true, and this is a very interesting point, and I think he's right on, right? I teach finance at the university level, and I think, I've heard students talk about using options. I've heard students talk about investing, quote unquote, or speculating in options. And I'm like, do you know what an option is? Do you know how to use an option properly? Do you know why you're using that option? What's the point, right? So yeah, I think he's right on track here. But an option's a great example of, just speculation and brokers making more money because whoever writes the option, right? And if you don't know what an option is, a call option is quite simple, right? You pay a price in order to guarantee that you can purchase at some price in the future, right? So let's just say that a stock's trading for 100, you buy a call option for the strike price of 105, right? Let's say, and it expires at some point in the future, right? This option does. So basically, no matter what the price does, you have the option as the owner of the call option to purchase the stock at 105, no matter what the price is. So if the price goes up to 150, you can still buy it at 105 and immediately make the difference there. Immediately make all of those gains. Even though the market was selling it for 150, you could immediately buy it for 105. So you can see the upside potential of owning a call option. But on the other hand, what you're doing, you are paying for that option, right? And so if the price never reaches that strike price, right? If the price stays below 105, you'll never exercise the option. And so you're just paying premiums for a potential to buy something and ultimately never going around to buying it. So you can see how Wall Street could make a fair amount of money just writing these call options. But nonetheless, that's just an example that he gave, and I thought I would break that down for you guys. Now, still, the situation can result in market dislocations that give Berkshire Hathaway an opportunity, he said. Buffett said that Berkshire spent an incredible $41 billion on stocks in the first quarter. And if you don't know this, they have a humongous cash pile, nonetheless. Unleashing the company's cash hoard over an extended lull. Some $7 billion of that went to snap up shares of Occidental, bringing up his stake to more than 14% of the oil producer's shares. That's why markets do crazy things, and occasionally Berkshire gets a chance to do something. He's saying a bunch of speculation causes the market to do crazy things. When the market corrects itself, when the market comes back down to earth, then Berkshire can do some great things. Charlie Munger said, it's almost a mania of speculation. We have people who know nothing about stocks being advised by stockbrokers who know even less, Munger said. It's an incredibly crazy situation. I don't think any wise country would want this outcome. Why would you want your country's stock to trade on a casino? Very good point. Retail traders flooded into the market during the pandemic, boosting share prices to records. Last year, the frenzy was fueled further by meme-inspired trading from Reddit message boards, but the stock market has turned this year, putting many of those new at-home traders in the red. The NASDAQ Composite, which holds many of the favored names of small traders, is in a bear market as of the open on Monday. Now, Warren Buffett has a long history of deriding investment bankers and their institutions, saying that they encourage mergers and spinoffs to reap fees rather than improve companies. He typically shuns investment bankers for his acquisitions, calling them pricey money shufflers. Buffett's $848.02 per share offer for insurer Allegheny reportedly excludes Goldman's advisory fee. So this is an acquisition that they are doing currently. Earlier in the session, he noted that Berkshire would always be cash rich in times of need and would be better than banks at extended credit lines to companies. An audience member made an inaudible comment while he was talking, and he said, "Was that a banker screaming?" And then that's what he joked. So again, just funny stuff that these guys have to say. Now, one of the other things I want to get into, and I mean, it's, again, no surprise that they bring this up. No surprise that somebody asks them a question on such a topic. But, of course, they had to talk about cryptocurrency. If you're talking about markets, you're talking about speculation, of course, they had to talk about cryptocurrency. And they've been some pretty big skeptics around cryptocurrency in the past and continue to be, it looks like, with some of the comments that they made here. So, the headline here was Warren Buffett gives his most expansive explanation for why he doesn't believe in Bitcoin. Okay, so Bitcoin has steadily been gaining acceptance from the traditional finance institutions in recent years, but Warren Buffett is sticking to his skeptical stance on Bitcoin. He said at the Berkshire Hathaway annual shareholder meeting Saturday that it's not a productive asset and it doesn't produce anything tangible. Despite a shift in public perception about the cryptocurrency, Buffett still wouldn't buy it. Now, you could argue it's just an old man that doesn't understand technology. Maybe, right? But this is a pretty smart old man, nonetheless. Whether it goes up or down in the next year or 5 or 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything, Buffett said. It's got a magic to it, and people have attached magics to lots of things. And he's not wrong, right? There are many things in the past that people have attached magic to. We attached magic to, anything that ended in .com there for a long time, and we saw how that ended in the early 2000s. Now, even Bitcoin enthusiasts tend to regard the cryptocurrency as a passive asset that investors buy and hold and hope to see increase in price over a long period. Buffett himself commented that there's nobody that's short on Bitcoin. Everybody's a long-term holder. And that's just, him joking, because of course there are people jumping in and out at any given time. For more sophisticated crypto investors, some coins offer a way for them to use their crypto productively, either through lending or as collateral, to create additional portfolio benefits. However, they're still young, highly speculative, and haven't broken into the mainstream like Bitcoin. Buffett elaborated on why he doesn't see value in Bitcoin, comparing it to things that generate other types of value. This was his quote. If you said for a 1% interest in all the farmland in the United States, pay our group $25 billion, I'll write you a check this afternoon, Buffett said. For $25 billion, I now own 1% of the farmland. If you offer me 1% of all the apartment houses in the country, and you want another $25 billion, I'll write you a check. It's very simple, right? If you told me you own all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it, right? I'd have to sell it back to you one way or another. It isn't going to do anything. The apartments are going to produce rent, and the farms are going to produce food, right? So, it's a decent explanation, and it speaks to his understanding of the stock market, understanding of businesses, and why he invests specifically in businesses, because what do businesses do? They produce, right? They either produce goods or services, and then ultimately they produce cash flow, right? And they produce profits. They produce revenues, nonetheless, right? So Investors for years have been puzzled over how to value Bitcoin, in part because of its potential to serve different functions. In Western markets, it's been established as an investment asset, particularly in the past years as rates and inflation have been on the rise. In other markets, people still see enormous potential for its use as digital cash. Assets, to have value, have to deliver something to somebody, and there's only one currency that's accepted. You can come up with all kinds of things. We can put up Berkshire coins, but in the end, this is money, he said, holding up a $20 bill. And there's no reason in the world why the United States government is going to let Berkshire money replace theirs. Another interesting point. Why in the world would the United States allow a cryptocurrency to take over for the dollar itself? Both Buffett and Charlie Munger have made hostile comments towards Bitcoin in the past. Most famously, Buffett said it's probably rat poison squared. And I think he said that at last year's shareholder meeting. And Munger doubled down on that sentiment on Saturday. He said, "In my life, I try and avoid things that are stupid and evil and make me look bad in comparison to someone else. And Bitcoin does all three. In the first place, it's stupid because it's still likely to go to zero. It's evil because it undermines the Federal Reserve System. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in his country." So you may say that those are terrible points. That's not the point. The point is that these old guys say some hilarious stuff, but there is a lot of wisdom to be had in the things that they say. There's a reason that the shareholder meeting is on CNBC on Saturday in April or May every single year, and that's because these guys, they give you some good nuggets of wisdom, right? They give you some pretty awesome things to take away with you. And there was absolutely no shortage of that in this year's meeting. Now, last thing I want to talk about that they made comments on was inflation. And Buffett talked a bit about inflation. Obviously, this has had a big impact on everybody's lives, everybody's pocketbooks. And Buffett had quite a bit to say nonetheless. So here's what happened. He was asked about his previous comments that inflation swindles equity investors. Buffett said that the damage from rising prices was much broader than that. He said inflation swindles the bond investor too. It swindles the person who keeps their cash under their mattress. It swindles almost everybody. Buffett pointed out that inflation also raises the amount of capital that companies need to have, and that it isn't as simple as raising prices to maintain inflation-adjusted profits. The Berkshire Hathaway CEO cautioned against listening to people who claim to be able to predict the path of inflation. The question is how much, and the answer is nobody knows. Buffett reiterated that the best protection against inflation is investing in your own skills. And so a lot there, a lot to unpack, a lot that you could unpack out of that statement. But, I think it's interesting that even, a guy like Buffett, who, has all the resources in the world to be able to forecast whatever he needs to forecast, hire anybody to forecast whatever he needs to, can be humble enough to say, hey, nobody knows where inflation's going. And I think this is what's wild about our country and what we heard for so long about the transitory nature of inflation and how it's all going to dissipate and go away and all these types of things, and it just never did. I mean, it was quite clear that it was going to happen one way or another, but not necessarily to a point that where it's at now, right? Who would have expected the level of inflation that we have now? But some of the other executives at Berkshire discussed the impact of inflation as well. Ahead of the shareholder meeting, the executives of several Berkshire portfolio companies told CNBC how inflation was hitting their businesses. One of them was Jim Weber, CEO of Brooks Running. So Brooks Running shoes, love those. Weber said it was tough to raise prices for Brooks products, but that he thinks some of the cost pressures could cool soon. We don't have unlimited pricing power, but we've taken selective price increases where we think we can. But our whole industry is so competitive. It's a big marketplace. I do believe in the supply chain that costs are going to mediate a bit. So yeah, and then, there were also impacts of inflation, companies like Nebraska Furniture Mart that they own and Dairy Queen, all those types of things, right? But nonetheless, this is what they had to say. This is what Buffett and Munger and all the managers had to say at the Berkshire Hathaway meeting. And it's a fun thing to talk about. It's a fun thing to watch and listen to every year. I've always wanted to go as a Berkshire shareholder myself. Have not gone yet. Maybe I can go before either Buffett or Munger kick the can and hear them say some pretty funny things. But nonetheless, as funny as it may be, as interesting as their comments may be, as much as it may make you perk up your ears, it really should, because there's a lot of wisdom. They've been right a lot more than they've been wrong. Or maybe they've been wrong just as much, but their wrongs are never quite as big as their rights. They are right on things that matter. And so just listening to the big things, listening to the old sayings that Buffett has every year for you, I mean, it's invaluable. So I'm sure that's somewhere recorded. By all means, go listen to it on YouTube, watch it on YouTube, whatever. If you've never watched or listened to it before, you may get something that can change the way you think about money, investing, finances, your life, whatever, right? But nonetheless, just type in Charlie Munger quotes from time to time. You can get a good laugh. So hopefully this is something that is interesting to you, useful to you, hopefully. If you can get some nuggets of wisdom from these managers of one of the best businesses in the world. So thanks for watching this video. If you could, go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan. And that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. Then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions. And you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to the show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think can be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.